Hi, welcome to the latest Big Money episode of the Federal. I am Giri Prakash, and our guest today is Mr. Atul Monga, CEO and co-founder of Basic. Mr. Monga was earlier with Policy Bazaar and Credit Suisse. He's a graduate of IIT Delhi. He was associated with the fintech marketplace Rubik Technologies, where he helped raise capital for the company. He was also associated with Disha Solar, a provider of solar power installation. Basic is the brainchild of Atul and his co-founders Kalyan and Pranam. It was founded in 2020 and offers affordable home financing, especially in Tier 2 and Tier 3 cities. Basic Home Loan has achieved an annualized disbursement rate of around 10,000 crore, and it recently secured $4.7 million in a pre-series B round led by the esteemed stock market investor Ashish Kacholia. Welcome to the show, Mr. Mongia. It is quite interesting that you have carved out a niche for yourself to cater to the tier 2 and 3 home loan buyers.
Thank you, Giri. Thanks for having me on the show.
Thank you very much. I would like to know the kind of profile that a tier 2, tier 3 home loan buyer or a home buyer is.
See, it's generally a urban poor or a rural rich kind of profile. So
Mm-hmm.
you can say in terms of income range, the income of the household will be in the range of 3 lakhs to 10 to 12 lakh rupees. So lower income group to mid income group one kind of people. If
Okay.
they are salaried, then probably working in a blue collar job, both husband
Mm-hmm.
wife working, having a nuclear family in an urban location. So probably living in a
Mm-hmm.
suburb location in a city, or maybe a self-employed
Mm-hmm.
guy in a tier 2 city, having a small setup of his own, and looking for capital to build house, or we also do home loan against property, so
Mm-hmm.
looking for capital to grow business. So
Mm-hmm.
these are some typical this is the typical profile of our customer. Generally their request, as in the loan request, is between 5 lakhs to maximum 30 lakh rupees, and
Mm-hmm.
uh, it includes both kind of homes, as in the previously built, which is a resale kind of house, or a affordable housing builder building a house, and they want to buy it under a construction link plan. So these are
Okay.
the files we cater to.
These home loan buyers, if you look at their profile, are they mostly in their own independent jobs or they hold government jobs? How's it in terms of percentage?
See, 70% of our customers are salaried customers, and
Mm-hmm.
it's like the people, as I mentioned, working in blue collar jobs, maybe
Mm-hmm.
working as maximum up to maybe a junior manager or those kind of roles, or people. If we talk about say a city, then a person probably working in say Amazon as a delivery boy, or with Swiggy, or maybe working in a small shop as a salesman. So those kind of profiles I'm saying.
Mm-hmm.
70% of our customers are those. 30% are people who have their own business. It might be a small shop, maybe a normal retail kirana shop, or a small shopkeeper in a tier 2 location, that kind of profiles.
Okay, okay, okay. So, what's the differentiation between, say, tier one, apart from the fact their profile is there, in terms of the fact that uh, does the home loan uh, parameters differ between a tier one and a tier two and tier three city buyers?
See, the home loan depends on two things. First is the profile of the
Mhm,
customer, in which you see their
mhm,
intention and ability. Ability is seen
mhm,
from their financials. So, suppose a person is earning say 30,000 a month. So, if he's looking for a
mhm,
loan of 10 lakhs, he can very easily pay. It's about 10,000 rupees in monthly EMI. So, bank know that this is a very comfortable kind of EMI he can pay. But if he's looking for a loan of say
mhm,
25 lakhs, EMI would range around 25 to
mhm,
30,000 rupees. Then it's not possible. So, so the thing is
mhm,
that financial profile is seen, and then the intention is seen through the CIBIL score. So even if a person is living in tier 2 city, but the CIBIL is greater than 800, so this means that the customer
mhm,
has a good profile. So this is about the
mhm,
customer. Second thing which most of the banks see is the property profile. Now what happens is that if you're buying a property where ownership chain is clear, generally bank requires 12-year period of ownership chain. And if the property is having a proper registry, it's not built on a gram panchayat kind of property, it's not a lal dora property, or it's
Oh,
not under demolition list like in
mm,
Delhi, where I'm based. So a lot of colonies are unregularized. So those kind of properties some have some kind of negative effect in your profile, or the overall loan profile. So bank evaluate the risk, and based on it, they offer the rate of interest to the customer. So if
oh,
a customer is having a good profile, property is also registered with proper ownership chain, that customer can also get the best rate of interest in the market. It
okay,
doesn't matter whether he's a tier 2 customer or a tier 1 customer.
okay, okay. So collaterals are the same.
Yes.
Okay, okay. And are the interest rate quite different?
So interest rate depends on these two parameters, no? The person's profile and the
Will-
property profile. So even if I'm looking for a, if I'm looking for a loan where I need, say, 2 crore rupees, and my annual income is 5 to 6 crore rupees, so I'll get a good rate because I can repay that EMI. But if
Yeah.
my income is, say, 70, 80, 90 lakh rupees or
Mm,
less than that, and I'm looking for a bigger amount, say 3 crore, 4 crore, then the
mm,
bank will have to factor that risk, na, that whether you will be able to repay the EMI or not. So there is
yeah.
a thing called FOIR, fixed obligation to income ratio. So every
Okay.
bank has their internal parameter to provide, they multiply your income with that FOIR. That this is the maximum, so they calculate the maximum EMI you can pay. So more you are closer to the maximum EMI, the greater will be the risk to the bank. So that they will incorporate in the pricing.
Okay, okay. So for a 30 lakh room, let's say the maximum that you end up paying, giving them the loan, on a 10-year schedule, what would be the EMI and what would be the interest rate?
So if the interest rate is around, the best in market currently is close to 8.5% or 9%. So if you are
Hmm.
getting a loan at that amount, so 30 lakh rupee loan for a 10-year loan, it should be close to 25,000, 30,000 rupees.
Oh,
So
okay, okay.
this means that if you are living in a city like Delhi or Mumbai, so
Mm,
means if you are living with a family, suppose a wife and a child, so
mhm.
apart from the loan EMI, the other things the banks will factor in that for your survival, you'll at least need another 30, 40,000 rupees. So if your
Okay,
salary is around 70, 80,000 rupees, then bank is comfortable giving you that. But if your
okay.
salary is suppose 50,000 and you have to pay 30,000 out of it in EMI, so it will become difficult for you to survive. So there might be a chance in future when you will not be able to pay your EMI, or if some
Mhm.
kind of thing comes in your family, some medical emergency or some other kind of spending, so there is a risk to the bank. So that those kind of things bank factor in.
Okay, okay, okay. And on an average, what's the average salary of people in earning member in a tier two, tier three city?
So the cases we do, we get average salary close to 5 lakh rupees annual household income of the as in the borrowers.
So obviously 30 lakh is out of the way for them, right?
Yeah, so what happens is that many a times, if a customer is buying a property of say 30 lakh rupees or a 40 lakh rupees, if they have their own savings, so they might
Mm.
not go for a complete loan of 30 lakh rupees. They will go for a loan of only 15 lakhs. So it
15.
depends on how much you are prepaying, or if it is a construction link plan where you have to pay in tranches and your EMI will increase over a period of time. So at that, there also bank will factor in those things. These are all credit parameters which bank put in their credit assessment memo, and based on that they take a call.
Mhm. And how disciplined are they when it comes to repaying loan?
See, I believe there is, less intentional kind of default in this category because,
Mhm.
for a poor man, for whole life, whatever savings they have, it is in the form of property they build. They will build a
Okay,
house and, give it to their children. And
okay.
second factor is that, for a poor man or a guy in a lower income segment, what happens is that, they might default in a personal loan because it will impact them. But
Mhm.
if they do anything with their home loan, EMI, the whole family will be on road, so it will become very difficult for them to manage. And
Okay.
thirdly, for banks also, it is easier to repossess property from a person who don't have means, because it's easy to take away the property, but a person who is educated, who is having enough resources, he can take the bank into litigation, so the case can linger around. So
Mhm.
it's easier for bank to repossess. If you see most of the affordable housing finance companies in India, their NPAs are lower. It peaks or spikes, I'll say, in periods like maybe demonetization or COVID impact, that it's a genuine thing that people don't have money in their hand. It's not like they are doing willful default. So
Mm.
that's why government provide moratorium in those periods, that you can
Mm.
repay it later on, but don't bother the customers, because it's not a willful default.
Uh-huh. And I think the larger question is that as a startup, why did you decide that you'll go to the only, I mean, rather focus more on tier two, tier three cities?
See, there are few things. I mean, it's not like that we started on day one ki we have to do affordable housing. I was
Hmm.
this idea I was been building. So while I was working in Indian fintech space, I worked as you mentioned with Policy Bazaar, with other fintech companies also. So in India, lending ecosystem has been digitizing. A lot of
Hmm.
innovation has happened in personal loans, in business loans. But when it came to home loans, the process was still very traditional. The digital penetration has not increased too much in India. In fact, today also, as a percentage of GDP, mortgages are just 11% penetrated. That's the percentage of mortgages in GDP. Whereas in developed economies, it goes up to 60-65%.
Hmm.
The key reason obviously is that there are few challenges with the ecosystem also. But 2020 in 2020, what happened was the problem actually got exaggerated. Means if you see, we all were seeing on the TV screen that people were migrating from cities to their
Hmm.
hometowns. So clearly there was a problem in market. People in urban cities, in tier 2 cities, they don't have places to live. They were living in a rented apartment. So we took it as a challenge, my team and me, that this is something, a big problem to be solved. And
Hmm.
obviously there is a strong push by government also in this segment.
Hmm.
Mr. Modi is always speaking about Pradhan Mantri Awas Yojana, housing for all. In fact, there are some new things being introduced in this Mantri Awas Yojana thing. So government is also bullish, a segment which has actually a problem. So it's something we thought we can solve through technology, and that's how we started working on it.
Okay, okay. So do the low income group, does it get any kind of incentive from the government?
Yes. So government has a program called Pradhan Mantri Awas Yojana, under which if you are there is a thing called credit links subsidy scheme, where if you are buying home for the first time and you meet certain criteria, your home meets certain criteria, then bank not only give you interest subsidy, they also give you principal subsidy. So your
Okay.
effective rate of interest goes down, your principal amount goes down. And
Mhm.
this is something which has been very successful effort from the government side, and
Mhm.
customer also benefited a lot in that.
Okay, okay, okay. If you come to the loan part of it, there are a few things, few questions I have regarding home loan for say women, for example.
Yeah.
And can the other question is whether you can actually take two home loans together.
Okay. See, for the women part, obviously, banks prefer to have a women ownership, because then your application become more soft. Means, I'm not sure how to say, but generally we consider that if a woman is there in the loan or in the home ownership, then it's a more genuine case. Means the whole family is involved, so your
Mm.
repayment will be much better as compared to single man taking. Means I don't want to. I don't want to corner a demographic, but yeah, it's considered generally in market that if the woman is there in the home ownership, then it's
Mhm.
a genuine case.
Mhm.
Secondly, with the government has also put some benefits for women ownership. Like if a woman is involved in the home ownership, then under Pradhan Mantri Awas Yojana, you get benefits. So there, one of the mandatory condition is that there should be one woman in the home ownership.
Oh, okay, okay, okay.
Secondly, states have also given some benefits to that. That if there is a women owner in the home, then the stamp duty or the registration taxes you have to pay, they are
Mhm.
about 1 to 2% lower. So
Okay,
generally, these taxes are around 8%, but with women it goes around 6%. So
okay.
there is a clear-cut savings to the customer who is buying the house. So it's better to have a women ownership and plus most of the banks, they discount or reduce your rate of interest by 10 or 20 bips if there is a women ownership in the home. Yeah, these are the actual benefits in the market. So you should always consider having your spouse or any women in your household as member, as owner of the property. You will get better home loan deal from the bank.
Oh, that's quite interesting. Um, uh, Coming back to the NPAs. So NPAs are low here. What
Generally,
you?
in affordable home loans, in a regular market, if you see most of the affordable housing loans companies, they have a lower NPAs.
Okay, okay, okay. And by how much? It's by
For a traditional bank or a housing finance company, NPAs are generally in the range of 1.5 2% or 1% category. But
Mhm.
there are affordable housing loan lender where their NPAs are 0.09% or less than
Oh,
0.5%. So it's that
oh.
difference. It's almost the half.
But the documentation is the same. They have to submit the
Yeah, yeah,
same
yeah.
documents for a.
It's
Okay,
the same thing. The process with the bank remains the same. It's
okay.
only the loan amount which differs.
And how does basic work? Does it work? Does it have its own funds, or does it go and link it with a bank and nationalized bank and?
Okay, so when we started as a broker. So we
Mhm.
were more of a tech platform. So we
Okay.
digitized the workings of home loan and
Mhm.
we connected the bank to the right customer. And then we had actual agents on ground who did end-to-end fulfillment.
Okay.
Now, in past few months, after our fundraise, in fact, we have started entering into risk relationship with the banks
Mhm.
where we are taking the risk. So a part of credit is done by basic, so we
Oh,
decide the loan for the customer and then we are responsible for collections and other part of the customer journey.
and how much of in percentage? How much of credit?
It's actually small right now because we just started our fundraise. In
Okay.
total we have disbursed more than 12,000 crores in loans, and
Okay.
our own book will be very small as of now because we just started it.
12,000 crores to how many people?
Around 1.75 lakhs.
And how many tier two, tier three cities?
So we are present in currently 30 cities,
Okay.
and which includes tier one locations also. Like if I'm present in Delhi, then it is my hub, and through this
Mm.
we have multiple spokes around. So we cover Lucknow from here, Bareilly from here, Jaipur, Jodhpur. Similarly, then we have a presence in Mumbai. So from there we cover Pune, Ahmedabad, Surat, Indore. We have presence in Bangalore. So from Bangalore we cover Mangalore, Hubli.
Oh, okay, okay.
So it's a hub and spoke model which we do.
Okay, okay, okay. And are there any new kind of brand extensions or offers that you have in mind in future?
Yeah, definitely. There are multiple product ideas which we are working on, and
Mm.
we'll be launching as and when we have the MVP ready. So
Mm.
obviously we just started our own lending, as I mentioned. So idea is to grow it, and then probably there are huge opportunities in real estate also because many of our customers, they first take the home loan sanction and then they want to buy the property because they want to know their eligibility. So it's
Mm.
something which we can cross sell very easily. Similarly, we started home setup services around 7 8 months ago. That
Mm.
customer who has bought the house, now he immediately needs furniture, he needs to do the paint at his house. So we have those kind of marketplaces also on our app. So the idea is that we want to digitize the customer journey, that it's a hassle to make a house, so we
Mm.
want to make customer life easy, that my agent will do everything for them. So there are multiple things we are working on this.
Okay, quite interesting. Um, so during the you started in 2020, there was a bit of a lull during COVID, I'm sure. And then later you raised this fund recently. So how much of total funds that has basic raised?
So in total, we have raised close to $10 million, or you can say
Okay.
70 crores, and
Okay.
our total burn till now is around 23 24 crores, and now we have become a bit profitable in last March.
That's
So
right. Okay.
we are not burning money now.
Mhm.
Most of the funds which we have, we utilize it for new product development. Our core business is profitable.
Okay. Okay. Yeah, sure. Thank you, Mr. Monga, for taking time off to talk to the federal. Thank you very much.
Subscribe to the Federal's YouTube page for more news and updates.